This pattern 84% accuracy. This pattern 78% accuracy. In this video, I want to introduce 10 candlestick patterns with the highest degree of accuracy. This information is from the book Encyclopedia of Candlestick Charts by Thomas Balkowski, who tested thousands of patterns and made rankings for candlestick patterns based on their accuracy rate. Before we start, please pay attention that candlestick patterns alone are useless and they must be used in the context in conjunction with other aspects of price action analysis. If you're interested to learn price action trading, recently I published a book, The Art of Price Action Trading, which is a comprehensive guide covering every detail to master price action analysis. The link is in the description and you can get it later if you're interested to completely learn price action trading. Alright, let's begin with number 10, which is upside Tasuki gap. According to Balkowski, this pattern has 57% accuracy rate. This pattern is a continuation pattern and it gives the possibility for the continuation of the trend. This pattern forms following an uptrend and we expect that the price will advance after that. In this pattern, the first candle is a medium to long green candle which shows upside pressure following the uptrend. After that, we have a short to medium green candle that forms with an upside gap, and this tells us that the bulls are really strong in the market. And the third candle is a red candle that opens with a downside gap in the body of the second candle, but it is not able to fill the gap, and this candle is closed above the first candle body. This gap acts as a support level, and this formation shows that the bears are not strong enough to break this level and go down. This pattern tells us that we have higher probability for the continuation of the uptrend. This pattern doesn't form frequently, but when we have it, according to Balkowski, it has 57% accuracy rate. Number 9, matching low. According to Balkowski, this pattern has 61% accuracy rate. This pattern is a bullish reversal pattern, meaning it forms following decline of the price or near a support level, and it gives the possibility of reversal. In this pattern, we have two candles. The first candle is a medium to long red candle and it shows bearish pressure as we expect for being in a downtrend. The second candle is also a red candle but shorter body, and this candle is opened with an upside gap in the body of the first candle. At first it was a buying pressure, but sellers took the control again and pushed the price down, and the candle is closed at the level that the first candle was closed. If the second candle has a lower shadow, it should not go lower than the first candle lower shadow. The formation of this pattern tells us that the bears are not strong enough to go lower and a support level is being established. This pattern shows there is a possibility for reversal, and according to Balkowski, it has 61% accuracy rate. Number 8, bearish breakaway. According to Balkowski, this pattern has 63% accuracy rate. This pattern is a bearish reversal pattern. It forms following an uptrend or near a resistance level, and it gives the possibility of downside reversal. In this pattern, we have 5 candlesticks. First, we have a medium to long green candle that shows buying pressure as we expect for being in an uptrend. After that, the next candle opens with a gap above the first candle high, and the result is a short green candle. We have another 2 candles in this pattern with approximately similar size as the second candle, and finally we have a candlestick that is opened with a gap in the body of the previous short candle and it closes below the body of the second candle. If the gap is completely filled, the pattern becomes more significant and the probability of reversal increases. In this pattern, the 3 short candlesticks show overbought condition in the market, and when the last red candle forms and engulfs the 3 candles, it tells us that the uptrend is ending and there is a possibility for reversal. According to Balkowski, this pattern has 63% accuracy rate. Number 7, bearish 3-line strike. According to Balkowski, this pattern has 65% accuracy rate. This pattern is a bearish reversal pattern. This pattern forms following an uptrend or near a resistance level, and after that a reversal is expected to happen. First, we have 3 consecutive short to medium green candles. The second candle is opened in the body of the first candle, and the third candle is opened in the body of the second candle. The formation of these 3 candles show that that we have signs that the selling pressure is increasing. The last candle is a medium to long red candle that totally engulfs the previous three candles. It opens above the third candle and closes below the first candle. This shows a very high selling pressure and possibility of reversal. This pattern rarely forms on the chart, but when we have it, according to Bolkowski, it has 65% accuracy rate. Number 6, inverted hammer. According to Bolkowski, this pattern has 65% accuracy rate. This pattern is a single candlestick pattern. We have a candle with short body, long upper shadow, and small lower shadow, or in the ideal situation, no lower shadow. Depending on where and how this pattern is formed, it can have different name or interpretation. When this pattern is formed following a decline of the price near a support level, it is called inverted hammer, and it gives the possibility of reversal. But if there is no support level and it forms after a long red candlestick, it becomes a continuation pattern because the long upper shadow shows rejection of the higher prices, and this candlestick is naturally a bearish candlestick. So in this situation, it gives more probability for decline of the price, and according to Bolkowski, this pattern has 65% accuracy rate. Number 5, two black gapping. According to Bolkowski, this pattern has 68% accuracy rate. This pattern is a bearish continuation pattern, and it forms in the middle of a downtrend, and after that we expect that the price is going to decline. The first candle is a medium to long red candle with small shadows. It is open with a downside gap, which means there is a gap between the first candle and previous candle. This candle shows high selling pressure in the market. The second candle opens with a gap in the body of the first candle, somewhere around the midpoint of the first candle body, but instantly sellers take the control and push the price down, and the result is a red candlestick that is closed below the first candlestick close, or ideally below the low of the first candlestick. This pattern shows that the price is more likely to decline, and according to Bolkowski, it has 68% accuracy rate. Number 4, bullish abandoned baby. According to Bolkowski, this pattern has 70% accuracy rate. This pattern is a bullish reversal pattern, which means it forms following a downtrend or near a support level, and after that there is a possibility for upside reversal of the price. The first candlestick in this pattern is a medium to long red candle that shows selling pressure following the decline of the price. The second candle is a doji, which is formed with a downside gap. There is a gap between the lower shadow of the first candle and upper shadow of the doji. This formation of doji shows complete indecision between buyers and sellers, and the third candle opens with an upside gap and closes well inside the body of the first candle. Here also there is a gap between the lower shadow of the third candle and the upper shadow of the doji. Formation of this pattern shows a possibility for an upside reversal of the price. This pattern happens very rarely, but when we have it, according to Bolkowski, it has 70% accuracy rate. Number 3, evening star. According to Bolkowski, this pattern has 72% accuracy rate. This pattern is a bearish reversal pattern. It forms following an uptrend or near a resistance level, and after that reversal of the price is expected to happen. First, we have a medium to long green candle that shows buying pressure following the uptrend. Then we have a small candle in a star position. The second candle is a spinning top with small shadows, and there is a gap between the two bodies. The third candle opens with a gap below the second candle body, and it closes well inside the body of the first candle, ideally below the midpoint of the first candlestick body. This pattern shows that the prior trend is weakening and there is higher probability to have a downside reversal. According to Bolkowski, it has 72% accuracy rate. Number 2, 3 black crows. According to Bolkowski, this pattern has 78% accuracy rate. This pattern is a bearish reversal pattern, and it forms following an uptrend or near a resistance level, and it gives the possibility of downside reversal. Following the advancing of the price, we have a medium to long red candle that shows selling pressure somewhere in the top. After that, the second candle opens with a gap inside the body of the first candle, but the bulls cannot take it higher and sellers take the control again and push the price down, and the result is a medium to long red candle that is closed below the first candlestick close. Again, the third candle opens with a gap inside the body of the second candle, but this time also the buyers are not able to take the control, and again sellers push the price down and the candle is closed below the second candlestick close. This pattern shows that there is much higher selling pressure in the market, so high probability to have a downside reversal of the price. According to Balkovsky, this pattern has 78% accuracy rate. And number 1, bullish 3-line strike. According to Balkovsky, this pattern has 84% accuracy rate. This is a bullish reversal pattern that forms following a downtrend or near a support level. In this pattern, we have 3 consecutive short red candles where the second one is opened in the body of the first one and the third one is opened in the body of the second candle. This formation of these 3 short candles show that there are signs that we have increased buying pressure. And the last candle is a long green candle that opens with a gap below the third candle, but then it closes above the first candle, engulfing the 3 short candles. The formation of this pattern shows a very high buying pressure in the market, and so high probability of reversal. This pattern forms rarely on the chart, but when we have it, according to Balkovsky, it has 84% accuracy rate. Please pay attention that these information are from the past performance, and now based on the current situation of the market, the accuracy of the patterns may be higher or lower depending on the market condition. And as I mentioned at the beginning of the video, you should never take your trading decisions only based on candlestick patterns, and they must be used in conjunction with other aspects of technical analysis. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.